Hello everybody, welcome to the TraderMerlin show for Tuesday, the 19th of April. It's almost 420. Don't get too excited, everybody. You got one more day to hit that bong and whatever the case may be for your 420 celebration. Your Earth Day celebration, as the case may be. All right, we've got a lot to talk about with markets, but I want to just dive right into things and get the show rolling. Obviously, our guest who's on the program today, we've had him on the program before in the past, which is no surprise. I like to bring on repeat offenders to talk about the financial markets. But today, we're going to focus on a specific topic. We talked about short-term trading futures, and I thought we might refine that a little bit more by looking at this graphic here, which is day trading futures. Our guest today is Jerry Baldwin, joining us from, I'm assuming, Chicago?
I am in Chicago, Merlin. Yes, sir.
Good to see you, my friend. How you been?
I'm great, man. I'm having a ball. Things are great. I'm grateful. Markets are moving. Opportunities are there every day. Having a really great time. Things are great. So how have you been doing?
Any better, I'd be twins, man. I mean, obviously,
Yeah.
I wish that crypto would move up 5,000% from here, but, you know, that's the beauty of trading. You get your ups, you get your downs. I'm kind of expecting there to be more of a bloodbath in the equity and futures markets, but it just keeps on keeping its chin above water here. So maybe we can talk about that a little bit later on as we progress. But all in all, you know, it's markets. They will always just continue to change and keep us active.
It makes it fun for us, right? Every single day is a different day, so it makes it a lot of fun for both of us.
It does. One day is extremely bullish, next day is overtly bearish, and you just go, what the heck's going on? Don't question it. Just go with the flow.
Absolutely. Merlin, it's so great to be here. You've been doing this at such a high level for so long, and I'm grateful to have been a part of it as much as I have. And it's, again, just, you know, great work. Keep up the great work. And I know people love you, man. So I'm just happy to be here, and we'll have lots of fun things to talk about today.
Well, thank you. You too as well. You got your own little following and community. I want to talk about specifically trading styles. So as I did the clickbait, as you will, with our marketing piece, is talking about day trading futures. Obviously, futures were designed to be trading instruments and more active. That's why they have the preferential tax treatment. But walk through us maybe a little bit about your style of what you look for when you're day trading. What are some, maybe your screen setups? Are you using indicators? Are you using, watch lists? How do you filter through this universe of everything to find those pieces that you trade on a regular basis?
Yeah, sure, Merlin. No, it's a lot of fun, and it's certainly, as you know, it takes time to evolve into finding a system that works for you. And I say that to my students all the time. Take the things that you relate well to with what I'm showing you, and put it into your own and customize your own trade plan. But I love looking at the I really like the four intraday equity markets, the Dow, Nasdaq, S&P, and Russell. I love the movement that they provide, the opportunities that they provide. There's a really good volume on all four of those products. I do like to look at gold as well as crude oil, again, because of the average trading range. They provide opportunity, they move plenty, and then also the volume is good on both of those as well. So those are kind of the instruments that I focus the most on, and then of course the micros that go with those as well. Sure. If you want to minimize risk or have a little more flexibility with regard to exiting positions. But I'm a big trend guy. I really like to look at multiple time frame analysis. I do use a couple of specific indicators to do the best I can do to be on the right side of the trend. And I will say, I try to put as many probabilities as I can in our favor when we're, identifying and ultimately placing these trades. And it goes well. I think, and I think a result of that is understanding, some of the basics of uptrend, downtrend, and when there is no trend. And so, multiple time frame analysis, as far as like times that I like to look at, I like to be intraday. I might look at, anywhere from a 1 to a 5, and even sometimes maybe something in between, maybe a 3. Okay. And then go out to the larger time frames, maybe up to a 60, 30, 60, somewhere in there, to kind of establish what the trend is. And it's funny, since I started doing that, my trading has gone to a whole different level. I think one of the things, I don't know, your story is so unique as well. I know for myself, I was looking only at one time frame when I first started, and you'd have things lined up, but if you're trying to go long when everything else is bearish, you're just reducing probability. So now I think following the trend of the larger time frames and going in line with those has really helped my trading go to another level. So that's what I do now. I've got a radar screen, which I'm excited to show in a little bit. I will show some of the indicators that I use. I've actually created my own indicator.
Ooh.
I'm so excited about
Nerd alert! Nerd alert!
Yeah, it's a ton, and it's working beautifully. That's the fun thing,
Hey.
you know. It's like, so yeah, no, I just took a blend of a couple of different indicators that I saw were working. And I thought to myself, hey, how cool would it be if I could actually have that candle labeled, so I don't have to, go through and look at all the numbers on all these different candles. And through the help of another guy who's smarter than I am with software, we were able to do it. So,
Let me
but
ask.
anyway, yeah, that's
Yeah, let me ask
that's
you.
the.
Let me
Go
ask you
ahead,
real
Merlin.
quick. You as far as futures goes, obviously we've got tons of different futures products. I'm going to ask this question because I'm pretty sure somebody else out there is watching and has this question. So you mentioned six. So you got your S&P, Nasdaq, Russell, your Dow. So you got the major indexes. You've got gold and you got crude oil. So you really got like six horses that you're looking at on a regular basis, which I think is great because you can really. I hate using this stupid term in the industry, laser focus, but I mean you can really just focus on those six. But what do you say to people that go, "Hey man, what you're crazy. You're missing out on corn and wheat and soybean and lean hogs and silver and platinum and palladium and you've got all these crazy futures products. You could you look at natural gas today, down 7%. Like someone's gonna look at you and go, Jerry, you're crazy. Why didn't you trade natural gas today because you missed that move? What's your response to someone like that?
Yeah, it's a great question, and it's a fair question. For me, I always look at some of the products that are gonna move, and if the S&P and the Nasdaq aren't moving, those other products aren't moving, and if everything's moving, then I can still. It only takes one instrument and one good strategy to be able to be profitable. So yes, we can trade more. But why go through all that extra work when we don't have to? If we can find a number of a handful or six products, seven products that are actually providing us opportunity, with good margin requirements, low margin requirements, in other words, measured risk. I'd like to keep things as simple as possible. And so if I can narrow it down to five or six products that move, and if those things aren't moving, odds are nothing's moving. And so that's one of my answers. I think the other thing too, Merlin, would be, some of the products that you named, for example, are really good products to trade, but they're also more swing trading products. And you and I, we do a lot of day trading. That's what we're talking about here in the show today. And not all of those products are going to provide good intraday movements. They're more geared toward maybe swing trading. So I think that's the other thing that I want to separate is, if I'm looking at, intraday opportunities, yeah, I'm going with, a million contracts a day plus on the S&P, or, a good few 100,000 on the Nasdaq, and taking advantage of those crazy ATRs, 50, 60 points on the S&P. I don't even know what it is on the 300 and something on the Nasdaq now. So yeah, it's a fair question, but that's how I would defend what I do, as far as narrowing down exactly what I'm looking for to trade.
Yeah, and I think that my response to that will be, look, you're always going to miss something out there. And there's a great comment from Chris. He says, no one can trade every opportunity every day. Right. And I think the important part there is if you're trading everything, you can't focus on it all. You're going to miss stuff. But if you focus on a basket that and you're familiar with the characteristics of those four indexes, again, S&P, Nasdaq, Russell, Dow, he's got gold and crude oil on there. Granted, you might have a different set of six, whatever the case may be, or 10 or 15, but whittle it down so you can focus more on those and you start to understand the behavior, you become more confident, you understand where those supply and demand zones are, and then what will end up happening is you'll start to become more consistent because you are a part of those securities, right? You really understand them better, whereas I knew traders who would just look at whatever's the top gainer on the day and just start buying that thing. I'm like, hey, do you know what that stock is? No clue, man. Just trading it. It's like, well, okay, you might get lucky. You might catch something and be lucky with it, but you're really going to forego a lot of consistency because you know nothing about the security. The traders are different in that one every single day. So I like the fact that you stick to those six. And I'm sure every now and again you'll sprinkle on if you see something nice in silver or soybeans. If there's a great setup, and okay, fine. But focus your expertise on what you're really comfortable with. I like that strategy.
Thank you, 100%. I love Chris's comment as well, and you're right. And you're right. Like natural gas last week there was some movement there, so it provided opportunity. And and it's funny because one of the stories, I started out trading stock like so many other traders, and got into options after that, and then within the last number of years, I got into futures and really just kind of fell in love with the movement and so many of the benefits to trading futures, like you mentioned, that the tax advantages and the volume and the low margin requirements. There's so many great things with the no pattern day trader capital requirement with futures. So many great things. But one of the things I didn't like about stock was that you did have to, you'd siphon through, thousands of stocks trying to find something to trade. Whereas now I've got, and I'm going to show you in a minute, this radar screen. I can't take all the credit for it, but I love our radar screen. We've got 6 products on there. We've got indicators tied into them. And a great example out of today, we looked, and it was actually yesterday. We found the Russell. Russell was the strongest of the candidates based on the indicators that I'm using. We went in, threw it on the chart, and ended up making a better than a 3-to-1 on the trade, just because that was the product of the 6 that were fitting the criteria that we were looking for. So yeah, it works out, man. And everybody has their own style, and I love the point you're bringing up.
Yep. All right. Somebody said there's some great comments and questions. Let me give a shout out to one of the viewers, because he's one of your students, and he says he wanted to give a shout out. So where was it? Harshad says, can you say hello to Jerry? He's my coach. So there you go. Let's give a hard shout out from Harshad.
Merlin, I can't say enough about it, and thank you to the students who are here with me. I talk about you all the time. People love you. I love you, and I'm grateful to be here on the show with you. And so many of these guys watch the show every day, and Harshad is like the first one checked in the morning in the day trading room. He's in the room every day. I've got 2 courses out there. I've got an intro to day trading futures and a swing trading futures course. He's been through both of those, the coaching, the whole thing, and he's just a great ambition, great guy, and making great progress in his own trading. So right back to him, and he was asking me about the time. He wanted to make sure he didn't miss this. So like I said, he tunes into your show even when I'm not here. But he loves you, and it's nice to see him here.
Great. Well, it's always great to have newbies. And by the way, if you are new, hit that subscribe button so we can get you alerted every time we have a new show every day. Let's go to question from Margaret, which is a good one as well. You talked about those shorter term time frames, going all the way down to as small as 1 minute. Margaret says, how large of a time frame for day trading? I think this one is very personalized, and I'll let you tackle the upper limit for you, and then I'll share my thoughts on it as well.
Yeah, but you're right. It's very personalized and very custom. For me, when we talk about the day trading window, in other words, the entry window, normally the largest one I will go to is a 5. Now that's as a day trader. Again, if I'm doing a swing trade, if I'm looking to either swing trade the future itself, or I'm looking to swing trade options on that future, then I might, obviously my entry window becomes maybe a 30 or a 60. But with regard to specific intraday trading futures, the largest one I will go to normally is a 5, and then I will use a 15, a 30, and so on to establish the trend on that. So again, there's no right or wrong. Like you said, it's a very personal preference. I went down to the 1 over the last few years because I was able to minimize risk more, and I still saw consistent moves. Now with the the advent of the micros in the last few years, and of course now within the last year, I think on crude oil and gold, it gives, we can take a big 5-minute candle that might carry a little bit of risk to it, but we can minimize that risk by a tenth, using the micros. So I'm very comfortable and actually prefer the 5 now, because again, your rewards become even greater, and your scaling out of that product becomes really advantageous as well. So, but quick answer to her question, for me, the largest one I would go to is a 5. How about you?
Well, and Chrissy's like, the 5, what he's meaning there is for your entry. So there's different perspectives, right? You have your entry, and then you have kind of the bigger picture. I would say anywhere, as far as entry goes, 15 is as far as I'll go. But normally my analysis starts. So if we're starting big picture and kind of working our way down, everybody, I start with the daily. That is, to me, the best. I love the daily. It's the perfect one. Why? Because every news network, every magazine, every newspaper is showing you daily charts, which means that those charts are burned into people's heads, and those levels, in my opinion, become much more significant. So I always start on the daily. It's the far left chart I have on my screens at home. And then from there I go from the daily, the 4-hour, the 60, the 15, the 5. And if I'm really bored, I'll go to a 1. But I'll be honest, I haven't traded the 1 in probably a couple of years. I stopped. 5 to me is the smallest time frame I go to, and that is really execution.
I love it, and that sounds in line with what most professional traders will do with regard to time frames. It's if you're trading a time chart, I've seen 15, which is another good one. I do like 15, but yeah, 5, 1, 5, 15. and then sometimes something between the 1 and the 5 are also, can be really good.
Right.
So, yeah, no, I think you're right on with that. That's perfect, and then hopefully that answers her question. Helps her.
Yep. I think the big challenge there is when you are on a 1 minute time frame, you can have a very tight stop loss because obviously you're using a 1 minute time frame. But as you go to a bigger time frame, every time you take a step up from a 1 to a 5 to a 15 to an hourly, that stop loss is going to be getting bigger based off of that chart formation. So ATR is obviously going to be changing as well. So when you start to go too big, all of a sudden you might be in a huge stop loss on your position. You might have to actually cut the number of contracts that you're trading. So there's always that risk management element that I try to incorporate into trading, regardless of asset class.
100%, super smart, and yeah, that's great. Professional input. I mean, that's exactly right, and that's why I said like with the micros, because like in stock you can go less shares, but in futures obviously the smallest you can trade is one contract. So on the mini, that, like you said, could still be pretty sizable in terms of risk. So that's why now going down to the micro, taking a $500 dollar risk and minimizing that by a tenth, down to $50. That's really cool to be able to do that and still, see the reward that you're looking to see. So for sure.
Nice, Jerry. We got Tom said, this is a funny one. Tom says, my sister said she has to be able to get 27 flavors out of one onion in culinary art school. Chop, slice, dye, fry, boil, etc. Because I'm trying to do the same thing with the SPX. Well, the good news is you don't need to get 27 flavors out of it. You just got to really get one direction, or even if you're going sideways doing spread trade. So I think that's a good one.
There you go.
Alvin wants to know about some sob stories, which I think we'll get to a little bit later on. Let's talk about techniques first, Alvin, and then near the end of this, remind me, we'll talk about what are some of the biggest challenges that he's had. Margaret asks, do you exit all at once or in pieces? So are you a scale in and scale out kind of guy, or all in, all out?
I'm an all-in, scale-out. That's what I do. I love, and this was something that I learned, probably a few years back, but I love being able to scale out, and I'll be honest with you, I normally will scale out at a 1-to-1, my first set. And the reason I do that is because I know you've experienced this, Merlin, and a number of your viewers have experienced this, but imagine being in a position that's really, really profitable, and you're seeing that thing and you're seeing all of that profit, and you still have more room to go to the target, and it can turn on you at any point, and so having experienced that, what helped me psychologically deal with that is locking profits in at the 1-to-1 level. So as a matter of fact, can I show an example here on the?
Sure. Yeah, go for it. Yeah.
Yeah. Let me share my screen here with you guys. I'll show you an exact example of what I do and why this is so beneficial.
There we go.
All right, you should be able to see the screen. This is the NASDAQ.
Futures. Yep. Got it.
Oh, this is cool. Okay, so this ultimately hit the 3-to-1. So yeah, so this is the NASDAQ future. This is a 5-minute chart. This was the origin of the move. This is from this morning. If you guys look down here at obviously the bottom, it's 8:30. So this was the 8:45 candle from this morning. I'll get into why I chose this candle. You see the little blue dot down there, by the way. That's my new indicator, but I'll hold off on that for a minute. So, but what I like to do is you can see here how we had a little bit of basing. What I do is I take the Fibonacci drawing tool and I line up my my snap mode. So I've got top of the candle, bottom of the candle. So that's my risk on this candle, which is fairly sizable. So that's why the micros were the way to go on this. But
it's only 90 points. Come on, only 90 points on the NQ.
Exactly, right. So you better know how to minimize risk on that. So so anyway, you can see how it based a little bit here at the 1-to-1. So I like to lock something in here, and this way I know that even if the whole trade goes against me, I'm a couple bucks profitable. So that gives me the confidence now to stay in at the 2-to-1, which is right here. Okay, you can see how we broke through it. The 300%, guys, for those of you who don't use TradeStation, the 300% represents 2-to-1. Okay, so that's taking my risk and then obviously multiplying it times 2. So you can see we based there at the 2-to-1. We based a little bit higher here at this pink line. This pink line, by the way, is a special ATR calculation that I teach my students with regard to how high or low a specific product can go. And then this ultimately is the end of the day. You can see right here the time at the bottom. This is like 2:05 Central Time. And look where it went, exactly almost to the tick. And that's where it reversed off of, was that 3-to-1. But so this was a trade that you set up in the morning, you automate it, you let it go to its 3-to-1. But again, you're really profitable up here. And if you have everything into that trade, obviously the temptation is to try to sell it. You want to take the money and go, right? That's all. It's human nature. we all want to do that. So as far as the way I do it, I like to scale. I might do maybe 3 contracts, get some out at 1-to-1, some out at 2-to-1, some out at either the ATR line or a 3-to-1. So I'll go all in at once, but then I'll scale out of that piece, at those specific levels. So that's not only the answer, but kind of a visual to help her see exactly, how I set this up. And this is, again, whatever time frame you want to do, whatever trade you want to do, but this is how I scale in and out.
Yeah, we've had a lot of guests on recently, and one of the main things is, I guess the real super successful ones, it's not about, I've got a target of 2-to-1, and when it gets there, I'm just taking the money off the table altogether. It's saying, okay, this 2-to-1 could turn into a 5-to-1, a 10-to-1, 1,000-to-1. You just don't know unless you give it a chance. So I'm right there with Jerry, which is I want to make sure that if I am in something, I give it the legs, I give it some room to move, and I'm okay giving back some profit. So in most cases, when it gets near 1-to-1, I'll take a portion of it off, depending on how big the position is, and then I will trail stop the second half, which is a bit different than I think what most people do, but I like trail stops. They just make it automated and makes it easier for me. And I don't usually get 1,000-to-1 rate of return, but sometimes I might get that 3 or 4, and it dips back a little bit. Fine, I'm okay to take that money and run, letting myself know I gave it a chance to turn into a real big winner. And that's the key for us, is not to have a whole bunch of small little winning trades. It's to have a few small winning trades and a couple of really, really big ones. And the only way you'll ever get there is if you let something run. So trade management is key.
See, and that's exactly it, Merlin. When you, like you said, when you are able to let something run to that 2-to-1, 3-to-1, or like you said, even beyond that, that's where I call them the home runs, but that's where the home runs come in. And again, the psychology or what gives you the confidence and the peace of mind to be able to do that, like you're saying, and like I'm saying, is lock something in along the way. Know that you've got yourself, your trade is paid for. Now you can sit back, you can go to the gym, go to the beach, go wherever you want to go, and know that there's a good probability near the end of the day you're going to end up hitting your other targets. But if it doesn't, you were still at least a small winner. So I think that's I think it's just a really great psychological way to be able to do this, and this is the actual execution of how you do that. I have a question for you, Merlin. How do you how do you trail it then? Do you trail it with an ATR, or what is your formula for doing that?
ATR.
Okay,
yep.
That's what I thought. Yeah, that's brilliant. I love that.
And the regular viewers here will laugh because I've drawn some pretty horrific visualizations of this from the past, but I use an analogy of a dog on a leash. And if I know that the leash, that's the most vicious, snarling, mean-looking dog you've ever seen in your life is tied to a pole in someone's front yard, and that leash is 10 feet long, well, you better make sure that you're at least 11 feet away from it. And that's, to me, the analogy of using ATRs. So if I'm on a 5-minute, if the trade is built off a 5-minute, I might be using that 5-minute ATR. If I'm scaling out, looking at 15, I'll use a 15-minute ATR plus some. So yes, definitely based off of the volatility of that security at that moment.
I love it. And that's actually a genius analogy. I think that I'm visualizing that. I know you're a big, you've got a dog, right?
I have a very big dog who's very friendly, actually, not mean.
Yeah, no, I know I see the pictures of you and the dog at the beach, so I know you're a dog fan. So actually, that analogy is perfect. And if you guys put ATR on your chart, any chart, I have it on my. You can see it here in my data window, somewhere over here. Here, ATR, and then also on the lower part of the screen. So again, whatever time frame you're on, it gives you the live ATR. So that's an example of how to trail that. So I love that, Merlin. That's awesome. And again, you're locking something in, and then you're letting things go. So it's really a great way to go. That's awesome.
Yep, there you go. Cool. You've got all kinds of stuff on here. Walk us ththrough some things. I know you mentioned some technical indicators. I know you like to look at radar screeners and filters. So let's talk about simplifying the process of your trading by maybe zooming into your screen a little bit and walking us through what are some of the things you're using.
Yeah, you know what, Merlin, let me start, and I'm gonna stay on the share screen, but I want to show you what I'm really proud of here. I've had some really nice feedback from this, and like I said, I'm not going to take full credit for this, but I had some help from the students creating this thing. But this is my radar screen, and if you look to the left, you can see I've got the products. I've got the Nasdaq here, S&P, Russell. I've got crude oil, and then if you scroll down, I've got a couple more. But what I love about this, and then of course these are these are the day trading time frames that I use, so I'm not shy about sharing those with people. This is what I do in my room. but I've got my entry window at either a 1 or a 5. Then I've got my 15, 30, and 60 for my larger time frame analysis. And what I'm a big fan of, I love the slow stochastic. And if you study slow stochastic, and if you back test and look at it, it's amazing the kind of microscope into the market it actually shows. And one thing, that I learned is, you never want to just use one indicator. If you can use, one or two or however, and if you can blend them, that to me has always been really a great recipe. So I blend the slow stochastic with the RSI, and I use the RSI a little differently than, what is conventionally taught. They're both overbought, oversold indicators, but again, I'm not going to use two indicators to achieve the same thing. So RSI goes between 30 and 70. So what I'm looking for out of RSI is for the numbers to either be above the midway point in a bullish trade or below the midway point in a bearish trade. So, stochastic would be positive, RSI would be positive. And when you see that on the larger time frames, then I go down to the smaller time frames and look for my specific entries. And if I got a couple other things on here, but those are the two main focus points. And as I go back to the chart here, so what I'm looking for basically is a crossover on the stochastic bullish in this example with an RSI territory. And if you look at, for example, this is, let me put the data window back up there because it'll actually show you the time, but here's the time of that crossover right here where the stochastic now goes positive. In other words, the K line goes over the D line, RSI is bullish. There's a couple other little things like, for example, the UOP I'll look at, but, the overall trend is up. And as a result, so I love the setup here. And like I was saying earlier in the show, what I've been able to do, with a little bit of help is actually now label that candle. So right here, this blue dot down here labels the candle as it's forming to show me that we are, now we are going positive on the stochastic with a bullish RSI. If we have one without the other, the dot does not appear. So it's showing me right here that this was the origin. So it's amazing. Now I know, okay, I want to go long above this. I want to put my stop down below this. I'm going to snap my fibs on there so I can mark off a 1-to-1, 2-to-1, and 3-to-1 level. Here's another blue dot. So what happened here was in this pause, the stochastic actually dropped, the K dropped below the D. Okay, in other words, it went bearish a little bit, went back bullish here, and now you can see the move continued. So it's almost like a rally-based rally to kind of put it in the terms of some of the students who are watching our show. So, I call this an inside candle, however you want to word it. But as a matter of fact, if we were to fib this one off as well, again, this is an inside candle strategy, top of the outside candle, bottom of the inside right there. Again, you can see right there, there's your 3-to-1 level to achieve the 3-to-1 beautifully. So that's my indicator. I love it. What I'm doing is I'm putting it into my courses and I'm putting it into a coaching session. And the reason for that is, with any indicator, I want an opportunity to explain exactly how I use it, to its optimum level. So, that gives me the ability to say, here's where the stochastics crossed over. This is where the other indicators were in line with that. So, anyone who wants to use it, is going to be welcome to it. But they'll also have the training necessary to be able to use it, to the highest degree of its probability. For example, the stochastics go from 20 to 80. So if I'm getting in a trade, based on a blue dot here with the stochastic in this example down around 48, that's a good trade, But if I'm looking at something, where I get a new entry and the stochastic's already, at 80 or 90, well, that's overbought. That trade could very well work, but the probabilities of it work aren't the same as it would be as if it were, here's the stochastic graph. You can see if it was lower in the graph. So, just little things, but it all makes a big difference. And when you're following the trend of the larger time frames, like you and I do, and like you and I were talking about, through the course of the room or the session today, it really can, lend itself to some high trading probabilities.
Do you, with regards to all the different dots, I see all kinds of different colors on there. Like, does it make a difference to you if the RSI is crossing and it's below, let's say 30, or if it's above 80? Because it should make a difference, right? Those are obviously very different conditions. If you have, or you're talking stochastics at the bottom, but if you have K crossing the D, below 30 or above 80, those are two very different indicators.
Exactly. And that's one of the reasons I want to have a chance to be able to explain exactly how we use this, because, it's going to give you a crossover on the stochastics regardless of where the number is. I don't have it. And I want that flexibility, because in this example, like up here on this, let me clear this out real quick. But so like in this example, yeah, the stochastic was already overbought. So the probability of that is not as great. But this pink line also represents how high price could have gone based on the HAR calculation. So that, kind of offsets it. And sure enough, the trade did work. So, Merlin, the dots at the bottom, because I want to make sure it's simple for you and for everybody, but the dots at the bottom and the pink dot at the top, though, that's my indicator. These dots on here, that's a I think we talked about this last time, but that's an indicator that comes within TradeStation. They call it a consecutive up or down.
Yep.
And what it does is I've customized it a little bit to where it shows me 2 consecutive closes in the same direction, which oftentimes, 2 consecutive closes in the same direction, whether it be up or down, can be the origin of a nice start of a trend. And, here's actually a perfect example. Here's my indication here, and then here's the second close. That trade went on there automatically with that indicator from TradeStation. And you can see from there, it was a straight shot up. And then every time it closed higher, that dot goes in automatically. So it looks like a lot, but as you do it a little bit, it really becomes just second nature, and it just becomes a lot easier to see.
Right. Yeah. I just, just some people might be wondering what all those different colors were. So you've got them all spelled out, I'm sure, in your materials. Radar screener. You mentioned you flashed that one up there. Are those the primary ones you're looking at? I know you had stochastics. You had ADX on there, which is interesting. Most people don't use the DMI, but that's cool. I like to see people using that one. And you had what was your third one?
Okay.
Oh, you had RSI. So you had RSI, you had the DMI, ADX lines, and stochastics. What drew you to those? Like, why are those so your favorites?
Probably just back testing, trial and error, going into studying which ones were working, and then just continuing to educate myself. Over the years, finding out which combinations seemed to work, and eventually I kind of came into my own system here, added them in, and saw that the blend with the stochastic and the RSI is crazy high probability. So yeah, I think just using them time and time again, and then just really studying them, Merlin, to tell you the truth, have been awesome. ADX, by the way, is amazing. That's actually I'm adding a piece of content to my course. Actually, I'm recording it this week, and that's something I'm adding in. ADX is basically strength of trend, and it's funny because you and I talk about the trend all the time, and this is an indicator that actually can measure how strong the trend is, which to me is really important. If you get it, obviously if it's above a certain number, the strength of the trend is stronger, and it shows more participants. So the probability of that working is even that much greater. So yeah, ADX and DMI is something, again, I find to be really it's kind of like a third thing for me that I look at. If it's in line, you got all those things going in your favor. I oftentimes use this analogy in my room with students. It's like, you got people, and there's viewers on your show who, they might trade stochastics, and there's other viewers who, are trading RSI. And so, when the RSI people get above a certain number, they're going long. When the stochastic people get above a certain number, they're going long. So when that all happens simultaneously, imagine the participants that are all now going long, and you're in at the ground floor on that. So it increases probabilities of that trade working, and obviously the same thing to the downside. So yeah, just a way of putting as much in your favor as we possibly can, Merlin, to see these things work.
Joe asks, he says, did you choose to go long since the NQ was low on the curve and bouncing off the 4-hour demand zone? I don't think that it was necessarily that. I think there's other criteria there. I mean, we can bring up your chart there. I can bring it up over here.
Yeah, no, I've got it right here for you, Merlin. Yep.
So go to a 4-hour just so we can start at that time frame and work our way down for Joe here.
Yeah, absolutely. Here's the 240.
Yep.
So let's see here.
Since Q is low on the curve and bouncing up forward. So, I mean, as I look at it, if you zoom out just a little bit so we can see the bigger context, it's saying it's high on the curve or low on the, zoom out a little bit more. Can you go out further? You're low on the curve just from what started off since the 29th of March, right? So we're certainly down near the low, but again, remember going long, really today and yesterday were kind of dangerous propositions because you were trending down. You're making lower highs and lower lows. And as you talked about, we're kind of looking at shorting those rallies as opposed to buying them. So there was definitely some pieces that Jerry was looking at from a potential breakout point here, right? So what was it that you were looking at to convince you to go long today, even though we're trending down?
Yeah, absolutely. Let me show you exactly what it was. So if I go to the I can actually stay on the 240, and you can start, and I'll go down to the 60. But if you look at the 240, if I click on the 1 o'clock candle from yesterday, you can see the stochastic blue line here, and it matches up in the data window, is down around 6. That's oversold, okay, because the 20 is oversold. So then in the next candle, we go to 9, which is still oversold. Again, the blue line is down below the green. It's over, yeah, it's actually here and then here, ultimately here, where the stochastics crossed above the 20 level. The blue line's above the red line, K above D, in other words. This is the origin of that move. So this market was already, in an uptrend as we started the day today. Mm-hmm. So that's one of the big pieces that got me into it. But this is really the more important one was for me was as I look at the 60, here's where we bottomed out right here. This is at 5 o'clock in the morning. And now all of a sudden the stochastic you start to see crossed over here. So this is where price started to fly up. Again, just playing the stochastics. And then if you blend that with the RSI, which goes positive right here in the first half hour of trading, everything was pointing up with regard to trend up to the 60 minutes. So being at the origin of that up move on a 60-minute chart, 30-minute chart, 15, that's what showed me what kind of momentum was coming into the market. And then going down to the 5 and seeing now a stochastic crossover with an RSI blend, onto the upside with the other time frames already doing this. I mean, look at this blue line. Look at the thing. It's heading straight up. So it showed you which direction the market was going. So, both approaches are correct. His verbiage is just a little bit different than mine.
Well, I think it accompanies it. I mean, really, you're looking at the indicators. Yeah. You're saying indicators helping you out. I can see this trend forming on the price chart. The indicators help confirm that. And then, Joe, I think you add that layer on of, we're low on the curve. You're at a 4-hour demand zone. So now you have multiple factors lining up, which just adds strength to the choice to make this trade long. That's what I'm thinking.
Absolutely. Yeah. Saying the same thing. You're absolutely right, Merlin. Yeah.
All right, Alvin, because he's complaining that he's not getting value, and he says we're spending time on boring stuff. Hey, Alvin, how much did you pay to watch this show today? How much is this costing you, buddy? Just checking, just checking here, bud. Just making sure that you're getting your money's worth. Alvin says, Jerry, how do you go about paying yourself? Sorry, I couldn't resist. Jerry, how do you go about paying yourself?
I take trips to the bank every day. That's all I do. So I just go to and from.
Well, I mean, I think it's different for everybody. Like some people rely on the trading for income. I don't at all. I don't take anything out of my trading accounts. My trading accounts are designed to continue to grow and grow and go. But other people are different. So, are you somebody who's trading and using that to generate income streams and needing that for daily consumption, or is it just are you letting your accounts grow as well?
Yeah, no, I do take money out from time to time, Merlin. Yeah, that's one of the nice things. I find for myself anyway, it's nice to reward yourself. And when you can put that into something tangible, to me, that motivates me even more. So yeah, no, I do. I keep my balances above certain numbers, but as profits grow and income is coming into those, I will take, or have money directly deposited, however people do it these days. But, yeah, no, I am one to pay myself. That's something that has kind of helped motivate me with regard to staying as focused as I am on my trading and treating it like a business. Like you said,
Sure.
I mean, that's something that people have. I forget who you said made that comment, but it was people have to look at what you're doing trading for. If you're looking for just growth, that's fine. If you're looking to have an additional income stream, so you got to set it up as a business if you choose to do it that way and. But everybody's different with regard to how they do that. So yeah, but no, for me, it's nice to pay yourself every once in a while.
Yeah, and to Alvin's point, I actually have one of my good friends. He's living off of his trading. That's his main thing, and he has no other income. So for him, it's after a certain point, he'll just take some money out. And it's interesting because his account slowly grows, but it's because he's taking that money out. I think he actually, if he would not pull money out and compound it, he'd probably be making a lot more. But he's got it set up where when he needs to make his payments, he'll pull out, $1,000 here, $1,000 there with some regularity. But, that's the challenge of trading is there is no regularity to it, right? You might have a $1,000 week followed by a $2,000 down week, followed by a $5,000 up week. These are the ebbs and flows of trading. So I personally, just me personally, not speaking for everybody here, I have tried to completely eliminate the need to withdraw money from the accounts. Now I move it around into other things. So for example, my futures account will get too big. I'm going to move that over into another asset class. And I've been putting a lot into crypto, as a lot of people know here. So, everybody's going to have different needs for how they need to access that capital.
Yeah, no, and that's exactly it. So yeah, however he chooses to do it, as he progresses in his trading, and same thing for everyone. Everyone's got their, that's very general, Merlin. Everyone's got their own way of going about how they handle their trading, like you said, either for growth or for income, so however, everyone's got their own path on that.
Mm-hmm. There was a question that came in through early on, which I wanted to get to. At least maybe we can do a couple. Those that watch this show regularly know that I am a huge fan of talking about the misery of trading. I would much rather point the finger at how difficult and challenging trading can be, and I'd rather scare people away from it than give them the false impression that this is like super easy and everybody's just going to make millions of dollars in the market. So Alvin also asked, Jerry, could you share with us some true heartaches that you faced in your journey that made you successful today? Honestly, please. What would you say are some of the, I guess, the most painful learning lessons that you've had?
First year of trading, trading without education and just listening to what other people were doing and saying, and ended up losing money, losing money over the first year and having trades just not go your way. I mean, that's that was something that taught me early that, this is like being a doctor or a lawyer. It's a phenomenal profession, but if you think you're going to, attend a free webinar or watch Merlin's show once, and walk out of here and learn how to do this, then you're grossly mistaken. And I've said that in webinars, pretty much that straightforward. So I realized, the importance early on about getting education and professional education, paid education. So I did. I mean, I've gone from software trading companies to, coaches. I've hired individual coaches. I've sought a lot of it and paid for a lot of education. But you're either going to pay in education or you're going to pay the market. So I paid the market for my first year because I didn't know any better. So, but after that, I learned quickly that, you better get yourself invested in this and learn how to do what people are doing the right way. And I think that's one of the reasons I love doing what I'm doing now is I have some really great stuff that I'm able to share as a result of doing this for the last 14, 15 years and, and getting, a lot of money in education myself. And so now I'm able to share that with people and help them with their path and accelerate their learning curve. And, and that doesn't come for free.
No.
I'm not doing this for free. I have courses online. Those are paid courses. You want to learn how to do this, invest in a course, and you're going to learn something. If you want to come to free webinars, we have people who come to free webinars all the time, right? And they're exactly where they were 2 years ago. So, you got to make a decision on how bad you actually want to learn this. And I made that decision early on that this is something I really wanted to learn, and I wasn't going to be afraid to pay for it. So, that's how I went.
Yeah, you think a lot of people think education's expensive. Education's a lot cheaper than the lessons that the market gives you. And, Alvin says, he's lost $100,000 in the market. I've lost $100,000 on a trade, buddy. One trade. One trade I lost over $100,000 on. I mean, hell, the viewers here know I lost about $63,000 on one trade in 2020 going with 420 puts. Those to me, obviously, as painful as they are learning lessons. And I've mentioned this before. I have got my page here of the 10 laws of trading. All of these 10 laws are all a reflection of the most costly, stupid, dumb, boneheaded mistakes I could possibly make. And make your own list. Right? I think if you want to get better at this, regardless of what school you go to or who your mentor is or what asset class you're trading, make a list. Every time you take a loss that hits you so hard you want to vomit, write down what happened. What did you do? Did you trade too big a share size? Was it, trading the high-flying stock? Were you in a meme stock or trade? I mean, what is it? What did you do? You're going to make those same mistakes over and over again, and ultimately you can start to identify them and not make those, or at least lessen the blow next time it happens. So, everybody's got them. Every single person in this room's had some losses that just make your skin crawl when you think about it, or you just want to, you feel sick to your stomach. Well, instead of feeling sick to your stomach about it, learn from it. Share that lesson with somebody. I mean, I'd rather, if Jerry and I go out to lunch or something, it's not like I'm going to sit with Jerry and be like, dude, I had this most amazing trade on NASDAQ. No, I was just doing what I was supposed to do. What's more noteworthy for Jerry and I to communicate with is, man, I screwed up so bad the other day. I was doing this and this and this, and that's how you both learn. That's how you get better. So focus on your losses is the most important thing, in my opinion, in trading, because making money is the byproduct of not losing it, and losing it is what you should focus on, period.
That's well said, Merlin. Absolutely. And part of what you're saying is logging your trades. I know that's a really good thing that I talk about in some of my stuff as far as, log the trades that you do, because in doing that, like you're saying, you're going to realize, either why it worked out or why it didn't work out. And if it didn't work out, if it didn't work out big, it's probably because, like you said, you went too big or you weren't following the rules, or most of the time it's a risk management and going too big thing.
Totally.
So, but logging the trades, that's a huge step in trading that, again, sometimes people don't talk about, or sometimes people don't do, that will really help get them to another level.
Yep. Jerry, I'm gonna go over to You Can Trade. So for those who don't know, Jerry is he's a coach over at You Can Trade. You can find him at youcantrade.com. I got the webpage up here. If you go to click on coaches, you will see there's Jerry pop up on the screen. I'm having internet issues today, which is kind of weird, but there's Jerry. Oh, look at old Jerry Baldwin. So you click on that one, and then from that page, you can get more information about his upcoming schedule, about courses, content, and all the goodies that Jerry is doing on a regular basis. So he's got some live stream videos as well. Look at all these little live stream videos. I didn't know you were doing live stream stuff.
So what that's a result of is the fact that I do a day trading room every day from 10 o'clock to 12 o'clock Central Time. So Monday through Friday, 10 to 12, yes, I host a day trading room that's a lot of fun. We have some great students. Harshad, of course, is included in that. That's something people can join in if they want to be, if they want to see what I do on a regular basis. That's every day, 10 to 12. And then under that, what you're seeing are 2 courses that I have available, a day trading course, a swing trading course. I do offer one-on-one coaching. So again, if students are, looking to go to another level and want to, this is their one-on-one Zoom session, coaching sessions, and I offer those. And so that's where all that stuff is coming from. And then this new indicator that I've just done is going to become available sometime over the next week or so. That will be built into the courses. So again, if someone chooses to purchase one of those courses, that will be part of the content. If they've already been trading for a while and they just want to do a coaching session, I will send them the application for that indicator in the coaching session, so they'll get it that way, and at least that'll give me a chance to kind of explain, like you and I were talking about, here's a blue dot, why is this one better than the other one? Well, let's look and see exactly why that is, so that we can set these people up
Nice.
to succeed and again trade with the highest probability. So yeah, I'm having a ball, Merlin. I'm grateful to be able to do what I do, and just having a blast, and always love being here with you, man. Always a great time.
Always a pleasure, man. Well, thank you so much. We'll probably get you on another month or so and see what else is going on with you. But glad to have you on. Hopefully next time you'll be out in California doing the show with us.
I would love that, Merlin. I would love that, and we're going to make it happen. And you too. Thanks again for everything, and you take good care and keep up the phenomenal work. Everybody loves you.
You got it. Take care. Thank you, man. Appreciate it.
Thanks.
Bye.
All right, bye-bye.
Guys, that was Jerry Baldwin of You Can Trade. You can find more information at youcantrade.com. Click on coaches, and you will see Jerry there. Cool. Interesting stuff today. So I did not buy Tesla puts. Just too risky for me. Tesla puts are going to happen tomorrow. Tesla puts will happen on Thursday morning. So let's go through some of the other stuff here that's going on. I would really want to look through some charts because so much has happened. By the way, you guys know that Jim Cramer on January 3rd of this year on his Twitter feed, and this is the reason you should not be listening to people like Jim Cramer, because there's a vested interest and ulterior motives, but Jim Cramer said Netflix, dash, and big letters, B-U-Y. So I'm going to go out here just to show you what happened when where Netflix was at, what the picture looked like. So here's the picture what Netflix looked like when Jim Cramer said to buy back on January 3rd. And I'll be honest, it didn't look that bad. It was still on an uptrend. Granted, it looked weaker, and because it didn't make this December high was much lower, that had me feeling, skeptical anyway about this thing continuing the trend to the upside. So there's where Jim Cramer, this little horizontal green line or whatever call it is, that's where Jim Cramer said buy, buy, buy. And boom, you got just kicked in the teeth on this one, right? So now Jim Cramer's defending himself, blah, blah, blah. And here you have, right up through today, here is Netflix. Now, I don't know if anybody's seen the after-hour trading. I will switch this over to a 5-minute chart so we can all just kind of puke in our mouths real quick. There you have the massive sell-off in Netflix. Now, here's something kind of funny. If you look at Netflix chart, notice where it started to turn. I have this green line here at $256, right? If I go out to a daily, where would you expect it to turn? At a demand zone, right? Well, lo and behold, where is it hitting right now? It's actually hitting this low point from all the way back in September of 2019. So I personally would expect this thing to bounce. It just seems kind of interesting that it's turning right there, down 25% right now. I wish that Jim Cramer was long as hell, but most likely he Bye. Yeah, BYE. That's a good one, Market. Most likely he didn't have anything in his portfolio of Netflix, and it's the retail investor that got screwed on this one. So that's Netflix after hours. And to Christy's point, tomorrow you have Tesla. And that, my friends, is really, without question, that is going to be the popcorn trade of the day. You look at the price chart of Tesla right now. I mean, obviously trading at $1,028, down about $9 in the after-hour session right now. But here's your daily. Tesla still looks good. This is going to be a crazy market tomorrow. So I'm expecting Thursday morning will be the time that I'm going to look to buy some puts, but only if we're up right around 1152. I'm expecting there to be a lot of volatility. In theory, this thing should just pop up. 1152 would be that point where I'd be okay buying outright, buying some puts on Tesla, just because I have this good feeling that Elon Musk is going to unload some of his Tesla shares just to clear up some cash so he can be more aggressive with his takeover plans of Twitter. So I wanted to start there. And by the way, you guys probably saw the headlines. Elon Musk is actually gaining in popularity with me because his comment about, he says, if I win this takeover, all board of directors are going to be making zero. I love it. These guys, they own like less than 1% of the entire company are these board of directors, yet they're running the show on a company they don't even have a vested interest in. Get out of here. You're just collecting a 6-figure check. Bye-bye, Felicia. Good job, Elon. Boot him out. Let's see. They cannot make 47,000 cars because of Shanghai COVID lockdown. Yeah, but you know what's crazy, Christy, is even in the face of the most crazy statistics and the numbers that all say they're horrible, Tesla always seems to have some upside craziness to it. So I'm not going to do anything until Thursday morning, but we will look at this when it happens tomorrow on tomorrow's show, which should be a fun, volatile experience to be sure. I love watching the popcorn trade of the day, which is all of a sudden big rips up, big rips down. We'll have to wait and see what ultimately happens with it, but that is your major piece for tomorrow. So let me run through. I wanted to show you just some stuff that happened today, and then I'll go through stuff that's going to happen tomorrow because I'm a little bit behind here on the things we're supposed to cover. Here's your earnings for today, and this, I think, is part of the reason why you're seeing the markets do so well. Everybody is just ripping. I mean, you've got great beat on Netflix earnings, and they're getting crushed after hours. You've got Johnson & Johnson beat, IBM beat, Lockheed Martin, Halliburton. All these companies beating. The only one that didn't was Fifth Third Bancorp. Other than that, everybody was green with regards to earning surprises. And then you had economic announcements. Look at the housing data, guys. For me, if housing stuff starts to pull back, that is a huge knock to GDP. Well, it's not pulling back. It's really looking better. We went building permits actually increased, and they're expecting it to drop. You had their housing starts actually was in line with the previous month, which was higher than expectations. So very interesting what's going on, at least with the economic data. And then, of course, we've got a bunch of stuff happening over the next couple days, and here is the stuff happening tomorrow. On the economic calendar, you've got inflationary data for Canada. That's all CPI. You can see they have all sorts of different versions of CPI. Let's see. What do I got here? I'm going to bring up some currency for you guys so we can see what the Canadian dollar looks like, because that, here is USD CAD, has been kind of just staggering, I would say. It's been whipsawing back and forth, but it just feels like it's kind of flat and uneventful right now for this Canadian dollar, and who knows, maybe some inflationary data will kick it one direction or the other. Now, we'll move down towards the bottom. You've got existing home sales for the U.S. They're expecting those existing home sales numbers to decline by about 200,000, so we'll see if that comes in line with expectation. Also, crude oil inventories. Now, the big stuff for tomorrow is this. There's your popcorn trade of the day, which is Tesla. You've got Procter & Gamble, Lam Research, Kinder Morgan, Abbott Labs, CSX, and then Alcoa, which normally kicks off earnings season, but they've been demoted out of the Dow, so they are no longer the kickoff. And then you have United Airlines. And there's also Spirit Airlines, which is one of the most garbage airline companies I've ever experienced in my life. How about Twitter? All right, Mimi, let's check out the Twitter chart. Why not? And don't try to push the show to an hour. Don't try to push the show. I see what's going on there. So Twitter down just a little bit today, but ultimately I'm not touching Twitter just because who the hell knows which way this thing's going to go. You could see huge up moves. You could see huge down moves. Now, granted, he mentioned he's going to pay $54.20 per share for this thing if this is approved. And again, I personally think that if they do not put this to a shareholder vote, then those board of directors are going to get sued. And this could be an ugly scenario. And thank you, by the way, for the comments, Christy, about the Friday show. That was kind of an impromptu fun one. But, these types of things don't come along this often. This, to me, is a pretty groundbreaking thing for the financial markets and, I guess, freedom, voting. I mean, the whole point of us having shares is so we have a say. And I'll tell you what, if I was a Twitter shareholder, I would be pissed, seriously pissed off, if I own this thing from like $45 and they're going to pay me $54 and you won't let me sell because you don't want to. Oh, where do I sign up for the class action lawsuit? Are the days of takeovers done with? No, I think that's a great question. The day of takeovers will never be done, right? There's going to be this evolution. What I think this is going to do is add some legal aspects to it, because for all intents and purposes, Elon Musk right now should be able to buy at $54.20 Twitter. Should just disappear and go private. Why? Because it was such a huge premium to what the shareholders had before. Now, could the board of directors say, hey, no way? Sure, but they should have a voting right. They should have, 20, 30, 40% of the shares and say, no, we control interest here. But they have nothing. These guys don't even use the product. I have no clue how you became on the board of directors. It's unbelievable. Netflix is losing subscribers rapidly. People paying for gas instead of binging and chilling. Hey, let's not stop Netflix and chilling, Tom. We know you're married, but no, you can't stop Netflix and chill. And obviously Netflix is taking it in the chin there. We knew that, right? We knew once COVID is lifted, Zoom was going to die, Netflix was going to get hurt. Anything that was Amazon might even take a little bit of a dip, but still Amazon is Amazon. Now we've got the mask mandates lifted on airplanes and things like that. So, maybe we'll see even further downside movement of some of these online social media sites or just sites that are boomed because of COVID and staying at home. Netflix was a huge benefactor of what happened out there with COVID. All right, let's see. Apollo Investment Group wants to jump in now, says it's undervalued at 54. You know what? After watching what Goldman Sachs did, you just can't trust any of this stuff. You can't. I mean, again, Goldman Sachs said it's going to go to $30 and is downgraded it. And then as soon as Elon Musk makes his offer at $54.20, they go, oh, no, it's not. Offer's not good enough. It's like, come on, just ridiculous. All right, I got to wrap up here. Now, so tomorrow I got a great show. So we had Jerry Baldwin on the program. You can find him at youcantrade.com talking about day trading futures. The guest for tomorrow is not going to be talking about day trading futures. He's talking macro, and it's one of my favorites because I love that he has such a good perspective on bonds, equities, currencies, and commodities. He looks at the broad picture for changes. Is the foundation of those asset classes changing? Because if they do, then they could have huge impacts on other areas of our market. So Scott McCormick will be our guest for tomorrow. I'm fingers crossed. I'll send him a reminder tonight. But Scott McCormick will be our guest tomorrow, talking about the macro picture. I like to call it the Beck Report, which is bonds, equities, currencies, and commodities. If you have comments on today's show or anything like that, you can post them on the YouTube site, right underneath the YouTube video for today's show. Post them there. You can also put your comments or email me your comments at TraderMerlin@gmail.com. Mimi says it was popcorn yesterday. Yes, Netflix was, but I didn't do a show yesterday, so otherwise I would have put the Netflix up there. We've got to double popcorn this week. There you go. I just thank you, Tim, for the graphics and making my popcorn trade of the day. That will be Tesla tomorrow night. Everybody, that's going to do it for me. Hope you enjoyed Jerry Baldwin, and it's going to be another great show tomorrow with Scott McCormick, CMT, talking technicals and looking at the big picture macro stuff on our markets. Until then, happy trading, everybody. I'll see you all tomorrow. Take care.